Welcome to the anniversary episode of the Pulse Check podcast. 2 years of industry insights, now with part 2. So let's dive in. How do you see it in banking now specifically? So from hype to really more a strategic opportunity, and what should banks prepare themselves for?
So I think banks at this point should prepare for strategic partnerships with companies. I'm not an advocate of having an in-house quantum research team because I just think at this point we are a bit too early for that. If you ask me, I think what is important nowadays for banks is to utilize the infrastructure that they already have on site. And this ties a bit back to the lines of research that I've been doing in recent years, how to make quantum or physical systems usable today in a certain sense to harvest certain advantages. Of course, you won't get the full quantum advantages, but there's actually quite a lot to do with the environment that we have today. And normally people don't do that. People are very binary. They either say, okay, we're on the classical end, I don't understand quantum, keep it away, we do our machine learning models and we are there. Or you're fully on the quantum end, where people say, okay, this is the revolution. We actually have to invest in this and we have to go full on. But I think strategically, what makes the most sense is that banks should find reasonable partners, whether these are individuals or these are companies. They should advise, number one, what is possible, be very honest about what is not possible. Finding a point of entry, I think that is going to be important, but it's going to take a while. But I think until then, the most important thing is not just to wait for super companies to create very impressive applications or to think, oh, how can we do this ourselves? But really look at what you can do today with simulating physical systems. There we know that this is going to be very impactful on banking or many other industries as well right now. And this is as well to build up your readiness for quantum later. If I give you a computer, you will not be able to run it because it takes years to actually even create the modeling, the way how you even think about encoding the data, what data do you need, how would you even run these systems. That's an expertise that people should really start slowly now to think on. And you can, if you think about physical systems and simulations. Later, when you have the hardware, once you find the entry point, then you have your portfolio stacked up of good applications, and then you can get hands-on.
What do you think will happen now for analysts with the use of AI?
I think AI changes jobs, the way we work, the way we live, in many ways. The big kind of hope for AI in financial services and maybe in other areas like healthcare is personalization. One of the sort of difficulties of the modern world we live in is personalization is really hard. We tend to give people, unless they have lots and lots of money, cookie cutter solutions. If you have 10 million, 100 million or more as a family or as an individual, you get tailored specific service. If you have $100 in your bank or $1,000 in your bank, you don't get very much of a service or anything tailored. Now, digital and the fintech revolution we've lived in the last 10, 15 years already helped in terms of democratizing finance, in terms of giving those individuals, particularly the more digitally savvy individuals, better service, better quality, because they could do self-service. But the kind of concierge service, the kind of tailored service that only rich people get or big companies get, AI allows us to give that to the whole of society. It's a bit like we've seen this with distribution via the internet. It's given access. Think about the access we get now online if you want to look on YouTube or other sources to some of the world's smartest brains. Before the internet or YouTube, you'd have to be lucky enough to study at Oxford or Harvard or Stanford or wherever, MIT, to get that kind of access. Well, you just go on YouTube and you see that you don't have an interaction directly with them, but so digital and the internet revolution already democratized or gave access to information, to data. AI is just accelerating that internet democratization. AI can maybe do that for financial services, healthcare, intelligence, etc., etc. That's all the positive sides, or some of the positive sides. There are obviously darker and negative sides in any transformation.
Any other big trend or anything you see in the future that will be life-changing for a banking consumer?
A life-changing trend in banking. Look, I think at its core, banking is not rocket science. It's managing payments, managing money, providing loans. My view of the future is that it ties into what really matters in this report. My bank knows me. They know what I do. They know how I engage with it, and they deliver the service specifically around me. I'm hoping one day in the future, I log on my banking app and my homepage is different. They know that Ben Quinlan every month sends money to mum and dad. So that option is there, pay dad, like as a pop-up. They know that I've just bought a trip. They have my transaction record. I've just bought a ticket on Cathay Pacific to Japan. And right away, they go, hope you're looking forward to your trip. Let us know if you would like some help with FX. We can give you a special rate on the yen. Here's the best travel card that we can offer you. If you're intending to spend offshore, you get 1% rebate on everything. Like, that's what I'm talking about in terms of a seamless customer journey. And I hope to the high heavens that I stop getting phone calls from these telemarketers just like you trying to offer me loans. That will be the future of banking that I will enjoy. That will be the future of banking where I feel my bank gets me. Because yes, there will be concierge, high-touch services that I will need. There's no doubt about that. But my daily, everyday banking, I think it just needs to contextually understand my journeys and experiences to make this seamless. I think we've discussed this concept before, invisible banking. Mm-hmm. It shouldn't feel like you're banking. It should just be a part of everyday life, transactions, paying, and so on, but done at the right points in time. No more banners trying to advertise something when I open an app. It's just a generic marketing campaign, the next push for this card. And I don't care. If you know what I spend money on, because you have my full transaction data, then you'll know what to provide to me and you'll know when to provide it to me.
There's a lot happening, and it's happening very fast, and it's therefore going to have significant ramifications or improvements in financial services. But if I'm to make three sort of predictions, one will be that we are most likely going to see a world where we're going to have some form of autonomous finance through agentic AI. So agentic wealth, agentic commerce could be themes that are going to feature prominently in financial services, where the bank is going to be there to make sure that you can fulfill life goals, and those are going to be executed again by autonomous agents. Second one is we didn't talk about it enough here, but the advancements with blockchain digital assets are going to potentially take us to a place where exchange of value, exchange of assets across the world are going to be near instant, 24/7, therefore enabling far faster volumes of transactions and exchange of assets than we've ever seen in history before, that will underpin much of what we've talked about from AI perspective. And the third one, I like this concept of invisible embedded finance. It is likely that we're going to increasingly see this as a trend. And what is that? If we were to bring it to life, if you think about yourself going into a supermarket today, you get a bunch of products, you go to a cashier, and could be a person, or it could be a machine, and you're there and you're checking out and you're opening up your Apple Pay or maybe even taking cash out to pay for that transaction. That is you feeling finance because you're doing it yourself. In this concept of embedded invisible finance, you're essentially just picking up whatever you need from the grocery store, walking out, not worrying about payment because the payment is taking place by itself. It's automatically picking up that you've selected these products. These products cost this much money. It's all automatically taking place without you having to worry about that. And we're going to increasingly see potentially these type of finance trends taking place across many aspects of our lives.
Anything that stands out? Any key topics, themes?
First of all, I want to start with something really simple. I don't believe that banks or insurance are innovative. So, and if you have no innovation, and I would say that's a common sense for everybody, even for people in the banks and in insurances. So where you get innovation, and I mean, when I started my business, that was consulting. Sometimes you need consultants to have new ideas, but nowadays you have a vibrant ecosystem of startups which can help you, and that was also a good part. And it was in the start of the fintech, and fintech means financial technology or finance and technology. It was disruptive, and the people were afraid of that, Revolut, etc., to be mentioned. But I was always believing that a B2B product is much better, helping the banks. And it's not that you then can have a super growth with that, or normally not. It's a steady growth, so not this high valuations within months, and no fast unicorns at all. But I believe that is a good point, and I was right. With the most of my investments, we could make a difference, add on. Although banks and insurance still believe they can do it on their own, but they have to copy it. They have never done the invention, and I still believe that the most brilliant people are sitting in the startups as entrepreneurs and innovators of the fintech.
What I think has a great potential outside of the more internal stuff in banking is the conversational banking approach. You know, when I was young, we went to branches. There was no internet banking. Then there came the revolution of the internet. And most people maybe don't remember, but this was not widely accepted by everyone on day one. They thought that's fancy, that's crazy, you know, is this secure, etc. It became a commodity. Then mobile banking became a commodity. In some emerging markets, they jumped the internet banking. They went straight to mobile because they didn't have the infrastructure in the country. And I think the next thing that is slowly coming is conversational style banking, because the technology is good enough, and we have showcases, use cases for that you can ask the same information you try to get from a restricted menu in a mobile banking. However good the app is, it's still restricted from a user journey perspective. You can just get by asking the engine, and you can then also edit. For example, if you ask our engine, can I afford the trip to Japan? Then it first takes all the information on your transactions, on your bank accounts, etc. Typical banking stuff. But then with this information, it also goes to external agents and looks what is the cost of a flight to Japan, which hotels can I afford, and it gives you a relevant advice. It says, hey, Salomon, if you cut down your subscription expenses for the next 3 months, you can afford a cheap trip to Japan in this budget class. And I think there's so much power in that, but we're not there yet. And I think for 2 reasons. On one hand, the guardrails that you can put around an AI are not strong enough, because it's still hallucinating sometimes. Even our own one is sometimes popping up with answers where we have no explanation for. So I think these guardrails need to be stronger. And I think with all the fraud and scammers and phishing going on, I think it also, this whole conversational experience needs to be embedded in a very safe environment.
This explosion of payment methods meant that as a consumer, it became more it's not that straightforward to pay. There's a choice. And then through that choice, all payment methods lead you down a different flow to authenticate and then finally settle to the merchant. But that end merchant who just wants to get his money has to struggle with like, oh my gosh, like someone wants to pay me, but what does he want to pay with? I don't know. So I'll give him everything. And then he chooses what he wants and he pays. And then I have to figure out, how to get the money back to me. But at the same time, because there's so many ways to pay, people don't follow through. It's the reason why, like for Visa, MasterCard, or Amex card, you put your card on file and then you don't have to key in that 16-digit number anymore. You get an OTP, your app notification, and you validate. So that's already really seamless. But for other payment methods, it's not. So drop-off rates were as high as like 80%. So a lot of Southeast Asian online merchants would have people shopping, start a transaction, but not follow through because, for example, like they did not receive their OTP. They entered the wrong address and there were returns. They couldn't find their address, so they thought that shipping wasn't supported. They couldn't go through the UX because, for example, the UX was built for like mobile, but they were on desktop, so they had to like zoom in, but like how do we zoom in on a desktop? So a lot of different questions. And then, I could go on, like sometimes they would see a QR code, then they were like, oh, I see a QR code on my phone, so how do I scan it?
Yeah.
And then they drop off. So Southeast Asian merchants start to face all these issues. So we tried to fix all this. Basically, the main problem was conversion rates. If I wanted to pay, I pay. There shouldn't be anything between the intention to the success, because why do you have something in between that stops this, right? I think this is something we don't think about, that we take for granted, because every time we pay in person, you just take out your phone, double tap, pay. You don't think that there would ever be a problem, right? But for online, it's a very different place. So we want to bring that experience to online world. And so we are trying to build kind of like a online identity or token vault that would be able to, in a way, tokenize all these different forms of payment tied to your identity, and then allow you to, at any one merchant, just verify that I'm Solomon, I want to pay. And then we handle the difficult part about like authenticating that, confirming the transaction, and then pushing the money to the merchant.
We have done away with paper and other frictions of the sales process, but customers still value that in-person advice, which is now augmented by digital tools. So the real takeaway for distribution at this point of time is, moving forward, Gen AI will possibly make our rookie and new agents more effective. It won't make them redundant. Now, IoTs have been extremely helpful for insurers when it comes to P&C or auto insurance. However, in life insurance, most customers got really bored of wearing a cheap device and tracking their steps. And, after a few months, they kind of went off their wrists. So though it improved people's awareness of how sleep, health, steps would improve your health and longevity, it did not have a material impact on insurance. So the takeaway here is, I think in the next few years, we're going to see a lot of emerging tech, which actually is going to make a difference to people's lives and society. However, for insurance, we'll have to take a customer preference lens to it and really assess and curate if an emerging technology really would work for us. However, customers' patience for friction is zero, irrespective of how sophisticated the channel is and what technology is powering it. So customers at this point, their preference really is no servicing. And if you look at the Uber example, what they really do well is track customer behavior. So they preempt a problem. If the customer reports a problem, they guide the customer to self-serve, and very often very quickly give you a resolution, giving the customer the benefit of doubt without pushing you to speak to a person or a bot. So moving forward, I think the takeaway is, most of our customers, what they want is always on, to be able to connect to an insurer, zero friction, and human where necessary. And I think that's what's going to drive how customers assess experience with insurers.
What does a health insurer need to do to be AI ready?
All too often, I think these enterprises just take what they have and then they throw something like AI at it and they hope something dramatically is going to change. Now, don't get me wrong, it will get better, right? I mean, we all saw the same thing back in 2017, 2018, when Google obviously kind of released all their transformer work. But what did we see in a lot of corporates? They just took the same data construct, threw new algorithms at it, and search and chatbots didn't get any better, right? Because, I mean, the underlying information didn't change. And so I think in that time period, we saw an entire industry emerge around tagging data sets. Really, that's contextualization. And I think there's, in healthcare, a lot of contextualization that needs to happen to take full advantage of AI. At Amplify Health in the last 3 years, right, we were going through and basically codifying with international standards every single claim in every single market that we were working in. That's one example of contextualization. Or if you think about even in claims administration processes, most claim insure tech in health businesses is legacy life tech. So the purpose of that technology is to just cut a check. And so they weren't collecting things like the line level details on the claims. That's contextualization. So, back to what is the information system of healthcare? You can't just take the data models, the physical data models that are coming out of your insure tech, your transactional tech. You got to invest time and intelligence around contextualizing it, so that then the AI can actually do something other than, what a highly skilled analyst can do. Because if that's the case, the most value you're going to get out of it is like some OpEx efficiency and not a real business breakthrough.
And that's a wrap of the 2 years anniversary episode of the Pulse Check podcast by Simpulse 8. It's been exciting. So many experts on the show. Very interesting topics being discussed. Please like and subscribe and join us for the next 2 years to come. Thank you.